I believe that Google stock is undervalued right now, and in this video we're going to talk about why I think that is. Also, I'll discuss what's been happening in my other portfolios since I've been away from holiday, just to wrap everything up. So just going into my sharesies, I'll just show you my Google position. We'll go click here to my portfolio, scroll down, there it is there, Alphabet. Let's click that. We can see that I've invested $1,028 into there, and the current return is minus $18 because I put in $1,048.58. So my Google position is just a bit lower than the ETFs that I've placed, but $1,000 invested into them is still pretty big in this portfolio. And we can see here from the charts that Google has not been doing really well. If we go to year to date, we can see that it is down by 14%. In the 1 year chart, it's only actually down by 5%, but you can see that it's had tried to climb past about $200 each time, and it's just been shot down as we come down here. So right now I believe there is an opportunity because Google as a company has been executing pretty well, and I will show you some data on that. We can see the market cap is currently $1.99 trillion. Its PE is at 18.56, and I believe its forward PE is even lower than that. So going straight into it, why do I think Google is a stock to be buying at the moment? Well, if we have a look at its revenue, and this is just the annual revenue data here, we click on that and it just shows us that Google has been going up. And a good metric to have a look at a company that is going pretty well is its year to growth value, and we can see that Google has been always going up in percentage every year. Now, while that's not massive, you got to remember that this company is what, $2 trillion, so it is still growing even though it's a massive company already. Another good metric here is to have a look at gross profit, and gross profit has been going up. If you don't know what gross profit is, in this website here you can just quickly click over, well, just don't even click, you just hover over here and it tells you that the gross profit is the company's profit after subtracting the costs directly linked to making and delivering its products and services, which means this is some of the money that they get after they paid everyone. And this is directly taken from the revenue number, and you can see that Google just keeps on getting bigger or earning more and more money every year. We then have a look at operating profit, which is a little bit different from the gross profit, and we can see that is also increasing. Here you can pause it here and you can have a look at what operating profit means, but it is a good metric to watch out for. The next one I like to also have a look at is the net income, and you can see that is also increasing. And that what you can do is get some of these values here and then divide it against the revenue to really see how it is increasing over time, and then comparing it to other companies that you might like or invest in. Just like how I don't really like to invest in negative PE companies because they don't make any money. On top of that, they don't make any profit, I should say. They do make money, but you know, it means they're going backwards if they have a negative PE. The reason for that is I like to have positive PE companies because I want them to make money and I don't want them to get in trouble, therefore end up going bankrupt, which means the stock price will go down. So moving on from these numbers here, so this is a good site to use as stock analysis, and this here is just a really brief overview of the company financials, right? We're not going too deep into here. The next one I like to do is go to Ticker Terminal and just to have a look at this metric here, and it's called total enterprise value over the revenues. So total enterprise value to me just means how you would value the company as a whole and not connected to the stock price, because remembering that market cap is what people will pay for the stock. It's not actually what the company is about. So enterprise value is just putting a monetary amount on the company for its assets and all its other financial metrics rolled into there. And then they have this here where they divide it by the revenue the company makes. So obviously the more the company goes up in revenue, this metric here will go down, because if the company gets more expensive or its revenues keep going down, these multiples will change, I should say. But what I'm looking for is that it's a good time to buy when these multiples are lower. So in the case of Google, we can see here that it has been hovering, you know, well, it's got it up here, the mean, the high and the low. While we're not at lows, we are at, what are we at 4.92 at the moment. So a good time to buy Google would have been here, but I wasn't really looking at Google back then, or you know, using this type of strategy, so I have missed out. But we can see here that I luckily didn't buy at the peaks at 6. You know, around about here, 4.6 is a good time to buy, I feel. And I have been buying, as you saw my positions there. So this tells me that Google can drop. You know, it can drop here, but it has been having good support, and definitely it was lower about a year and a bit ago. And remembering that its revenues have actually gone up since like 2 years ago. Another one I like to go through, which is a free website, is to go to AlphaSpread, and AlphaSpread has the DCF valuation. So it thinks that the intrinsic value of Google stock is under the base scenario of $157 US compared to its current market value of 161, so it's just pumped up, and they reckon it's overvalued by 3%. So they're telling you here that the current price right now is not really a great buy for Google, but I think that it is a good buy because they are increasing their revenue year on year. They're making money. It's just that there's a lot of fears at the moment that all other technology is taking over Google, other AI platforms are taking over it, search is going down, but I still believe that Google is doing pretty damn well, especially I know that YouTube is very popular and people still use their search engines. So this brings me on to the next part is, am I buying Google at the moment? Well, I have been, as it has been coming down, but what I do want to see now is a reversal. And so because I am running out of money to buy Google now in my normal Sharesies account, and we can see here that, you know, it's pretty obvious, right, that it was going down from this high point here, but we can see that the 10 SMA is coming up to the 20 SMA, and it's starting to get some decent traction. So that's going to cross because the stock price is 160. So as long as it can stay up there and break from this price range here, I think Google is going to start moving up again, but you never know, right? It could try to go up and then it might break down, but I think it's starting to have some good strength, and the earnings was pretty good. So that's why you have this jump up in stock price, but I will be watching for this here. I've already built my position. I would like to buy a little bit more, but money's a bit of a problem at the moment. So another thing I could be doing with Google is doing some options play with them, but the stock price is $160, so which means that I'm going to have to provide 16,000 US dollars of capital if I am to do some sort of option. So it is going to be very expensive there. I don't know if I have enough capital or I want to put all my money into doing a Google option. I'm not sure yet, but yeah, you can screenshot this because I do trading in my Interactive Brokers account. I'm not going to cover that here, obviously, but it is something I do, and this is just a disclaimer that it is very risky, but it does allow me to make $150 every week, or you know, potentially make $150 every week by doing this kind of trading. So moving on from that, what else have I been doing? This is my Invest Now accounts, and you can see here that it is currently at 6,500 New Zealand dollars, and it's in 50% pretty much ETFs and then 44% managed funds. So the ETF is the Smart Shares USF that I've been investing in for a while, but I've actually started investing more of my money into the Foundation's Total World Fund. And what I'm doing with this is actually throwing a bit more money and growing this account, because this portfolio here, it's actually exempt, or not exempted, but it pays its own fifth tax, which means I can go over and invest over $50,000 without having to worry about that, because this here is all paid for it. And this is really my long-term one, and I should be consistently putting more money into this over years, you know, but I have been neglecting it, but I am now starting to put a little bit of money every other month into this when it comes in. And this one here is my Hatch account. It just shows you that I am still invested 100% into Tesla, but I've only got about 8 shares left in this account. Now the current price at $477 is obviously in New Zealand, it's not in US dollars, just to make it easy in here, but I've got 3.8k in here, and the position, the return on it is pretty good. You see it's up 65%, but I won't be selling any more Tesla. I did sell a significant amount, but that's, you know, that was a good play on my part because I did time it right. But yeah, it's just Tesla was just a bit too volatile. I think the price had gone up a bit, and I'm just trying a different strategy now where I'm buying ETFs, and I do a lot of my trading in my Interactive Brokers accounts, which means that I don't want to hold too much money into Tesla. But yeah, if Tesla goes back down to less than $200 a share, I'll be a willing buyer. But yeah, I did sell 45 shares between the $300 to $440 mark, so those were good gains for me. And you know, if the stock does pop up, then yeah, I'm only willing to have 10 shares in Tesla because I've got another 2 shares somewhere else, but that's all I want to allocate for that company at the moment. So just to summarize this video, I think that Google stock is cheap right now, and every week I will be trying to buy a little bit more if it stays down at these levels. If you have any questions, feel free to ask them down below and I'll do my best to answer them. The trading platform I use is Interactive Brokers, Hatch Invest, Stake and Sharesies for individual companies, and I use Invest Now for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. Feel free to use my referral codes if if you want to invest in New Zealand. And for those who want to hear from me on a regular basis, because sometimes I can't make them when I am on holiday, I do post every other day on Instagram, so I'm quite active there. You can see in my stories what I'm doing with my accounts, what trades I am doing. Please like and subscribe, and thank you very much for watching. And if you want to click this video right here, it's all about my options trading playlist and how I make money from the markets. I make about $150 at the moment, New Zealand dollars, in the markets, and I've done $50 every week, sort of the last 40 weeks, to trial to get me to this amount now. So feel free to watch that playlist. Thank you, and I'll see you in the next video. Goodbye.